original, the only SmallCapSteve. Today, we're looking at Vireo. They posted revenue of $160.5 million. Norum, a lithium stock on the venture, really catching fire. They're looking to use chlorine-based leaching for lithium clay extraction. We'll get into a little bit of that. Jushi, they've expanded their California footprint. AYR Strategies just closed on their $157 million offering. And we've got a big guest from Vireo Health coming on, Kyle Kingsley. I'm pretty excited. I love nerding out and just chatting about U.S. cannabis operators, so I'm pretty excited about this one. So buckle in and let's hit it. Mr. Jason, can you hear me?
I can hear you. I'm having all kinds of sound issues. Things are coming across choppy.
We were trying to get this set up, and it was some technical issues, but you can hear me now? Doesn't look like you can.
I'm hearing you. There's just a delay. I'm reading your lips instead.
The Saskatchewan delay. The weird thing is your upload's
we've had
great.
a massive snowstorm, so
I don't know what's going on with you weirdos out in Saskatchewan, but hey, let's get started. So in the news today, we've got Vireo. They posted earnings, revenue of $160.5 million and a loss of $120.6 million in Q2 of 2020. What can you tell us here, Jay?
So Vireo this morning posted a much larger loss than I was expecting at the very least. I don't think analysts were expecting the loss either. Caught some flack on Twitter because people didn't like that our headline had the loss in it. Sorry, I'm not the one that's putting out the results, guys. The loss largely seems to stem from unrealized loss on their convertible debentures, as well as some transaction costs, which I believe are related to the Sweetwater deal, where $22.6 million was spent in the acquisition, just in terms of costs. I mean, the company, they posted some growth in terms of cannabis revenue, as well as their distribution, but overall, I think that loss is certainly noteworthy, and it stands out to me heavily. They also saw a massive reduction in their cash position as a result of that Sweetwater transaction. Something like 300 and some million was spent on that acquisition in terms of cash. So a lot of money spent, and I mean, I don't know specifically offhand when that deal closed, but they recognized not even $1 million in revenue from that transaction for this quarter. So we'll see how it plays out going forward, but certainly seems expensive at this point.
Okay. Let's stick talking about some cannabis names here. AYR Strategies. They've closed an overnight marketed offering. What can you tell us about this?
This is a story we initially covered when it was first announced. Originally, they were looking to raise $137 million. It grew to $157.6, and that is a result of the 15% over allotment option being fully subscribed. No warrant included in this offering. Straight shares at $34.25 a piece, and about 4.6 million were issued, which really isn't bad considering the amount of money they raised.
Okay, this is a very interesting name. I've been a fan of it. I'm a fan of any company that generates positive operating cash flow, something that tends to get me excited. It's something that we don't really see in the space too frequently. This started out at a SPAC. They went and they tried to successfully acquired operators that actually generate cash flow, which, if you're trying to view this from a risk-reward standpoint and you're trying to evaluate custodians of capital, it's always a good sign when you see positive cash flow. It means that the company's not going to have this sort of, overburden of, cash burn where they're going to have to raise money. let's take a look at the next name here. We got Jushi. They just announced that they're expanding into California. They're expanding their California footprint. What can you tell us here?
Yeah, so lots of cannabis news this morning, that's for sure. Jushi was just the latest. They're growing their footprint into California. They've acquired 2 new licenses. One is just a license, the other's an operating dispensary in Palm Springs. The other is, where is it? Grover Beach, sorry. And there they've got 78% ownership of a license that they didn't actually provide a timeline for when they expect the retail location to open. It'll be the 4th and final retail dispensary in that city once it actually opens up. And then they provide a bit of commentary for their Culver City dispensary as well, which is expected to be operational by the second quarter of 2022. So they seem to be looking for a headline in this news release. They didn't really provide much insight in terms of actual cost of acquiring these new licenses and operations, but with their market cap, I imagine it's not really material for them. Mm-hmm. Noteworthy for Jushi is 3 analysts in the last week, as you had up there briefly, have now provide coverage to the company. A bit of a range of price targets there. The most recent to initiate was that of PI Financial, who commenced coverage yesterday with price target of $14 Canadian. So, mm-hmm. I mean, California right now is not Jushi's primary target. They seem to have a strong foothold in Virginia and Pennsylvania, which analysts are all hot and bothered about, but they seem to be expanding fairly efficiently.
Yeah, they were putting out guidance of about $40 million in EBITDA, 40 to 50 million. High level here, if I pull up sort of their wide charts data, let me pull this up on the screen for everybody. We're talking a market cap of about $900 million, and they're guiding to $40 to $50 million in 1 year forward EBITDA. So, like, what does that work out to? Around times, give or take. It sounds a little bit expensive. It's certainly not cheap. At this point, though, you've got management that has real skin in the game. They're known as strong M&A guys. I don't love the valuation here, if I'm being completely frank. But they do seem to be executing here. So we'll see. I will judge them in 1 year based on the numbers they actually put forth. I like seeing a management team come out and show some onions, show, hey, we're gonna put a big EBITDA target out there. That's great. I always, we like these numbers. It gives us an idea of what management thinks they can do. But they've also got to be prepared to take the heat if they put up a huge duster, and we're looking at this company, say, in a year, and they're still generating negative operating cash flow, and that EBITDA number is negligible or negative. Then it's kind of like, okay, well, do we trust these guys as custodians of capital? So they've kind of set themselves up here. It's the company, the stock's moving in the right direction, having gone from a low of $1 to now sitting at $8. There's clearly, tremendous traction in what they're doing with the stock, and they're clearly just raised a bunch of money too, I believe. What's the latest on the money that they actually raised? Do you remember off the top of your head?
Sorry, I'm getting all kinds of pixelation coming through here. I don't know that they actually closed the financing yet. They were looking to raise $35.1 million in overnight market offering. That was on January 5th. So, I mean, I imagine it probably closed by now. I didn't see the final results on that. Sorry, I'm just pulling it up in a different window here. And I can tell you if they closed it or not. Yeah, they announced the pricing, but they didn't announce the closing, which is somewhat weird for a
there's a lot of
technical
stuff that there's a lot of cool stuff that goes on in the background too. They could be having a bunch of different strategic groups who want to come in, and there's one guy who's like, oh, I'm going to invest, and he's just waiting for some cash to clear, and they really want to bring him in, legal stuff. So I don't know that it's always a big issue if they're a couple days longer closing than what the market might anticipate. It was a big financing. I don't have the number off the top of my head, but this stock has a lot of traction, and so far, they've executed. We'll see where they manage to go here. There's certainly a lot of opportunity in the U.S. A lot of those naked licenses that they can go grab and execute on. So this is a name I'm very curious to watch over the coming year. Okay, so what else do we got going on in the news today? We've got Norum Ventures. They look to use chloride-based leaching for lithium clay extraction. So this is a story here that we covered. This is a name, former client of ours. Or there might still be a client. I'll have to ask Jay about that. We're long the stock. So this is a Nevada-based lithium play, looking to advance the Zeus lithium project. Stock's just gone crazy. It's gone from like 15 cents to over $1. Jay, you there? What can you tell us? Can't hear you. Got to turn your mic on. Oh. Jay's having quite the morning there with his technical issues. I don't know. So let me tell you guys about my night last night. Because I want Jay to be the guy who goes through the news. So I had a pretty. Oh wait, I can hear him.
Yeah, no.
Can you see me? Can you see me clearly? Can you see me clearly?
I can see you, buddy.
Okay.
So
can I riff on my night last night? Okay. Yeah. So
tell your story.
This is fun because I'm getting a little bit bored here watching you just play with these technical issues. So last night, our producer Chris, I love the guy. He sets up a big interview with the famous Jim Rogers. So, I'm stoked. Jim lives in Singapore. He's a famous. Some people say he's a billionaire. I don't know what his net worth is. I don't think that anybody would know, but he's an epic personality, epic trader. So excited, so happy to have him on. And I get the email from our producer, Chris, 2 days ago. He goes, "Hey, Steve, I got James Rogers coming on." I said, "You're Jim Rogers? Wow." So he sets it up, and he told me that he had a time lined up over the phone. I think he said 8 p.m. So I was like, okay, well, I got to be on standby here. So last night, I'm introducing Power Band to some really, really important people that I think the company ought to meet. These guys, perhaps they may be involved in getting involved with the company or investing. And Chris, out of the blues, like, "Hey, I got an email from Jim Rogers. He says he's ready to go." And I said, "Well, Chris, was there any confirmation? Is this happening?" And Chris goes, "Oh, he's really mad." So Chris, I'm going to pull you on here. This is my producer, Chris, here. Chris, welcome to SmallCapSteve Live.
Hey, guys. What's up?
So what happened here? Why was Jim Rogers, why was he so angry? Why weren't you able to confirm the meeting?
Nah, I sent him an email this week. So he said, "Hey, well, I'm fine. I'm fine to go online with you guys." However, I gave him the dates and the time. He didn't reply. He didn't confirm.
Well, he was pretty angry about it. And it's funny. My wife actually brought this up to me today. She's a board member of our child's daycare, which apparently they have a board for. She's like, "Oh, I set this meeting and nobody replied or confirmed. I don't know what to do." And I said to her, "Well, that's my life. Is all I do is organize my calendar and reach out to people and make sure that they're going to join." So, Chris, I mean, I don't know what to tell you, but you're going to be in the doghouse for a while here. You pissed off a billionaire.
Hey, when was the last time I pissed off a billionaire?
Yeah. I don't know about in the Philippines how you guys treat your billionaires, but here in Canada we treat them with respect. So Anyways, I ended up having to conduct the interview
that's a very trivial
I,
statement, Steve.
I ended up having to conduct the interview myself, which it was supposed to be Cassandra. So it's going to be called The Daily Dive with Cassandra Leia, featuring guest hosted by SmallCapSteve, I guess. So we'll have the Cassandra intro and everything. And then they're expecting to see the beautiful Cassandra. They're going to get this gargoyle on the screen.
But the best part is, Steve, that you have not mentioned is you'll actually be able to see the stars in Steve's eyes by the end of the interview, where he was just sitting there, leaning back, and just laughing it all in all of its glory.
Oh, God. So anyways, guys, I see we got Kyle Kingsley has just logged in. I don't want to sit around and talk about boring small cap news here when we've got the CEO of an MSO on. Kyle, can you hear us?
Yeah, loud and clear. Speaking of gargoyles, happy to join the show.
So Kyle, what's where are you originally from? I see that you're from University of Minnesota. Did you grow up there?
Yeah, I actually grew up in a small farming community, believe it or not, named Harmony, Minnesota. A town of about 1,000 people, agricultural community, predominantly corn and soybeans. And I kind of, intended to step out of Minnesota every step of the way, but I did undergrad up in Duluth and I did med school in addition to residency in Minneapolis. So my one stint outside of Minnesota was really several months in Austria, where I finished a German major. Pretty limited utility. Don't necessarily recommend people take that path, but it was a great, few quarters in Europe there.
Okay, so I got to ask you about this. You got a background as a physician. And I've spent some time talking with, I don't know if you want to call them institutional investors, but certainly high net worth individuals, serious portfolio manager type people. And I've mentioned U.S. cannabis to them, Americans, about, to me, it looks like an attractive space. We got these sort of high potential EBITDA, high revenue. They should be all over this. And when I bring up U.S. cannabis to them, they look at me like I'm some kind of crazy person going, it's a Schedule I drug. What are you talking about? So I'm really curious for you, Kyle, what it's been like in the early days. You're a physician who's got this very straight and narrow path to go down, and suddenly you're telling your family, everybody in your network that you're getting involved in cannabis. What was that like early on for you?
Yeah, physicians are a conservative crew. I'm less conservative than most as far as our approach to career, et cetera. But I've always been interested in entrepreneurship, very interested in horticulture, and interestingly, just my perspective, working in the emergency department for a decade, was that cannabis, just didn't really matter as far as substances that cause problems. It was sort of the one thing on the urine drug screen where if cannabis was there, you just didn't care because it didn't matter clinically. Opioids, dangerous. Many other drugs, cocaine, amphetamines, all this stuff can be problematic, but we just sort of ignored cannabis. And so I distinctly remember I saw a patient, it was actually sequentially, I think I saw him 2 out of 3 nights or something like that. He had been shot in the back in one of the Gulf Wars. I worked night shifts. We ended up chatting one night about 3 a.m. And he said, Doc, when I was in California, I just smoked a joint every day or two, and I was on no opioids whatsoever. And, I had almost no pain. He refused to smoke cannabis in Minnesota just because it was illegal. So very straight shooter. And he was requiring massive amounts of morphine and opioids to control his pain. So that was kind of first time where I looked at it as not only a benign thing, but actually potentially helpful, especially in the realm of chronic pain. And so if that had not happened, I don't know I ever would have thrown my hat in the ring in Minnesota, where we had a very clinically, medically focused program focused on just very pharmaceutical products. And that really got me to step into the space. Since then, I've liberalized entirely. I want people to have access. I want people to have flower. And I've sort of opened my eyes and seen that there is more than just this dogmatic FDA path, especially when it comes to chronic pain, where we're killing people routinely with opioids. Tens of thousands of people die each year from opioid overdoses between prescription opioids and heroin. It's just a huge problem, and cannabis is a very real alternative for some of these folks.
So you've been watching the conversations here, or you've been participating in them and actually giving the talks to investors. How much has the conversation changed, or the investor appetite, over the last 2-3 years since you kind of first got into this?
Oh man, yeah, night and day difference even from a few quarters ago. We're seeing substantially increasing interest stateside from large funds and bigger money here in the United States. I'm of the opinion that the cannabis industry still has hundreds of billions of dollars of value to bring to bear. I just look at what we're aiming at. We're aiming at being a replacement for opioids, alcohol, and tobacco. All of those industries, pharmaceutical, alcohol, tobacco, they're in excess of $1 trillion globally. We're just getting started here in this space. It's a foregone conclusion that the feds are going to catch up and liberalize this, open it up for people. People should be able to access this benign substance. And so we're very excited about carving out our piece of the pie, doing everything we can to be the default replacement for opioids, alcohol, and tobacco.
So you mentioned carving out your piece, and it actually follows into my question quite well. You guys have operations in a number of states. How have you picked what states to go into? Just because they're kind of all over the map, and this is something that's always interested me with multi-state operators is they're all over the place. So what kind of difficulties does that make in terms of running your operation, and just how do you end up in such a position?
Yeah, it's a good question. So we have 5 core markets. It's possible that we'll expand that number over time, but right now we're really focused on 5 markets, and they're sort of in two baskets. We have sort of what I consider to be the more East Coast type states, which includes Minnesota, New York, and Maryland. And then you have the kind of the Southwest, Arizona, and New Mexico. And for us, we found ourselves a little bit vulnerable if we just focused on sort of the Northeast without some more kind of heavily flower focused, more mature, what we call pseudo-medical states, heavily flower focused, such as New Mexico and Arizona. And so for us, these are very synergistic. We feel that our operations in Arizona and New Mexico actually put us in a very good spot to win the transition as we turn the switch from these medical programs, in some cases very restrictive medical programs in places like Minnesota and New York, to adult use. And so the main reason we chose our core markets is that we are able to achieve scale on the production side, and we feel like we have a fighting chance to be best in class retail. And so that's a primary driver, but we love the synergy of our Southwest states with the Northeast. Absent that experience, I'd be more concerned about us winning that transition. And make no mistake, the transition from medical to adult use is really how you win the game in these limited license states. It's been a big focus for us. We've had a false start the last 2 years in New York, and so we've really been looking to pull in adult use talent. We have a heavy flower focus. Just the quintessential Vireo. I don't know if you guys saw our brand called Amplify that we've rolled out. This is proprietary terpene enhanced packaging, so it's all natural. Essentially, what we can do is preserve the flavor of flower. As you guys know, bud loses its flavor very quickly, even if you vacuum it or pack it under nitrogen, optimize the moisture. These terpenes disappear in a hurry. And so we've actually built this proprietary concept, partnering with e-bottles on the manufacturing side. We have our own brands. We have royalties on the e-bottle side for manufacturing. We're excited, just to really bring concepts like this that are going to retain value over the next few decades. And really bring a different wrinkle to the flower space, which, let's be honest, there haven't been a whole lot of changes there other than genetics for quite some time.
What can you tell me about Minnesota as a state? I a lot of the early cannabis operators, we hear their sound bites constantly. New York, 5, I think it went to 10 operators, where you get for retail and cultivation and processing. Florida started out 25. I think it's unlimited now, but I've actually never really even heard what Minnesota offers. Is it vertical, or is it kind of like the different types? What can you tell us about Minnesota?
Yeah, the take-home point with Minnesota is we actually can't sell flower here, which is really a problem. But there are 2 vertically integrated operators in the state. We're very much demand limited still in the state. Right now, most people cannot access the program because we're limited to oils, capsules, topicals, the oral solutions, things that are more expensive. And, I support aggressive testing and safety and all that, but the cheapest way to get people access is really flower. And, that's the big problem with the Minnesota program, is people can't access that. Now, interestingly, less than 42.5 grams, an ounce and a half, is a petty misdemeanor in Minnesota. So essentially decriminalized. And yet our medical patients in the program cannot access flower via the program, which just it doesn't make any sense. We're looking for support on both sides of the aisle and hopeful that Minnesota can catch up and at least add flower to the medical program here, which would do wonders for many people who right now are facing opioids as an alternative, or illicit market California cannabis that's been rejected because of its pesticides out west. It's time for the change, and hopefully we can get it done here with both sides of the aisle.
So are you active in terms of lobbying then?
Yeah, we're trying to be as helpful as we can to legislators. And, the nice thing about being a physician and having physicians and kind of public health people on my team is that's our focus. What is good for public policy? What's good for public health? And this is sort of a slam dunk, all things considered. Risk-benefit analysis, flower should be part of the program here. And I know that kind of all parties seem to support it, but that doesn't mean it will happen politically necessarily. As you know, COVID has really restricted sort of legislative bandwidth across the country. And that's one thing we could run into if we had standard bandwidth, standard sessions here. We could probably get this done this year. COVID just adds a little bit of uncertainty there. Similar to adult use in New York last year. It was really COVID that pinched that off.
So you guys had licenses in Ohio and Pennsylvania. You're selling those right now for cash. I find this an interesting strategy. It's something I talk about a lot as appropriate custodians of capital. It's interesting if you're able to get licenses via just the standard application process and then turn around and sell them for cash, which was the case with at least one of them, right?
Yeah. So we sold Pennsylvania. And for us, this was really, our history is one of chronic undercapitalization until recently here. Mm-hmm. That's sort of the story of the space, frankly. Yep. And we opted, we could be undercapitalized in 6 core markets or well-capitalized in 5. There were some structural issues with Pennsylvania that we didn't like. We had limited retail. We weren't huge fans of the facility just because, it was landlocked and, we were going to max out at like 200,000 square feet. It was definitely one of the sexiest markets we were in with substantial upside. And so we opted, that was kind of the obvious choice for us to exit that market. I think it was sort of a win-win deal. And now we're fully capitalized with sort of, clear indefinite runaway ahead of us. And that's a great place to be. For the first time since I've been in this space, I'm not, out there courting investors. It's really just, we're head down, focusing on what we do in our core markets, trying to get deep in those markets. And it's been a paradigm shift that's been really pleasant. When I signed up for this 6 years ago, I didn't realize it would be fundraising for 6 years.
Yeah, that was actually one of the questions I wanted to ask you is, and I'm glad that you brought up the capital raising environment, which in these early stages, I doubt that when you got into this in 2014, you were thinking that you'd have to, come up to Canada to list on the CSE. And you spend probably, I'm sure that you've spent more time than you would like to talking to investors and rather than just, building your business. How much time do you spend now just focusing on that sort of capital raising part of the business?
Now that we're capitalized, not a whole lot. I still probably do a day or two a week directed towards that, just generally speaking. Mainly, aimed at U.S. interest, and we're seeing some big players kind of enter the fray here. This is all public information, but that's been a pleasant transition just to see this real money looking at the space. And I think we're just getting started there. It's very exciting to see this transition, and with the inevitable federal change, maybe as soon as in the next few weeks here, it's going to be pretty darn exciting to see what happens in the space.
So federal change, I want to grab hold of that thought process. Let's pretend that February 1st, they managed to get things through. Of course, they never will. But February 1st, it's no longer Schedule 1. It's now, call it full rec across the country. How would you change what you're doing now to support that?
Yeah, it's not going to result in a lot of immediate changes. The opportunity for us really is these limited license siloed state-based programs. That's not going to change independent of the federal circumstance. They will persist. States are not going to be quick to, give up the jobs and the in-state apparatus for producing cannabis-based products. So I believe we have, at least 3 to 5 years of these meaningful siloed state-based programs. No one's interested in outsourcing their cannabis growth to California, even though that's what we're doing now in some states via the illicit market. So that's kind of our thought. One thing that will change over time is just the cost of access to capital. We're particularly interested in seeing the cost of capital on the real estate side go down. We think that's forthcoming. It's always nice to have that cost of capital go down.
Yeah, I mean, the genesis of my question around that, you kind of covered it, is just how you foresee things changing in terms of cultivation. Do you foresee it all moving to California and similar states where things are more agriculture based, or do you still see things being produced locally for quite some time?
I see it being produced locally for quite some time, just because of the political desire to keep this home. I think people are going to be very interested. Local politicians will want to keep the local jobs, the local production. Long term, this goes to where it's cheapest. To me, that's the Southwest, Humboldt Triangle. It's places like Puerto Rico where you can grow at scale. Where the plant grows naturally, that's where it's cheapest to grow it. So you get down to the tropics. We like the dry Southwest. That's a pretty amazing place to grow cannabis from a cost effectiveness standpoint. But a huge segment of this space becomes an agricultural commodity. And that's not going to be produced in 100 or 200,000 square foot warehouses. That's going to be grown in 100, if not 1,000 acre fields, harvested mechanically, taken care of by tractors, et cetera. It's going to become agricultural. There's always going to be the boutique premium flower that can be grown in little buildings, but a big part of this industry becomes commoditized over time.
What can you tell us about the state of cannabis in the state of New York? I'd like to know more about sort of, kind of what the run rate in the state looks like, what the political appetite to add more licenses is. It's an interesting state. It's like 2/3 the size of Canada, and we don't really hear a whole lot of talk about it.
Yeah, so it's likely based on what the governor has said that it's going to be part of the budget, which I believe statutorily has to pass by April 1st. This is our third go round with adult use attempts at adult use here in the state. Based on kind of some economic considerations, COVID, budget deficit, we think it's quite likely that this will get done. Our job is to really be partners with all decision makers in providing them with inputs and information. And, we've been in New York now for 5 years, I believe, and it's been a middling to poor medical market without flower, but excited to get people in New York access. Right now the illicit market there is huge. The other big thing is that really irks me, and again, this is coming from a white guy, but the relative lack of access to this industry from the minorities and folks that have been most affected. It really does bother my team and myself. Excited for components of diversity and really making my dream would be for the space to eventually look like those who were incarcerated disproportionately in the last many decades here because of this accident of history. So that bothers me. I hope that's a big component of what happens in New York, and I think it will be the social equity component.
When you're looking at M&A, how do you go about diligencing operators?
That's tough in the space. 6 years ago when I stepped in, I felt like I was the only professional here, to be honest. And it was kind of terrifying. And, we've had a lot of success with our big batch of M&A that we did back before our RTO in March of 2019. All of these just sort of panned out. But a lot of luck there. Even a blind pig finds a truffle from time to time. And just, I feel like the groundswell and just the general direction of the market made all those look good. But for right now, we just look to see whether it's accretive. It is, you hit it on the head though. A primary consideration is due diligence on the operators. Most of us that are doing acquisitions want to keep some operators home there, so you're not. It decreases integration risk to some extent, but it is tough to really vet that. And there are still a lot of folks that legacy operators that have been doing an amazing job, but there's a lot of chinks in the armor when you lift up the hood. Not to mix metaphors.
Do you care to talk about your share structure at all? Sort of who the big shareholders are, any convertible debt, any overhang?
Yeah, just again, sticking to everything that's public. I believe I'm still the largest shareholder at around 10%. There's been some public information about big U.S. funds entering the space and doing their public disclosures, and that's become quite sizable. Kind of results in a little bit of a crunch on the float. Let me just tell you some broad stories about my early investors Our first round was based in Harmony, southeastern Minnesota. I don't run in circles that are financially enabled, generally speaking. And I naively thought, I just need $200,000 or $300,000 to start this cannabis business in Minnesota. So I talked to my dad. He got some of the rich guys around the fire back in 2014. This mainly consisted of farmers. One of the town veterinarians was there. There might have been a teacher there. And I was hoping to just get $200,000 or $300,000 of commitment. I wish I had recorded that pitch. Again, this was based on getting the license in Minnesota, one of 2 licenses there. And they committed to $1.2 million that night. And, that just blew my mind. Wow. My hometown is subsequently thrown down, I think, for $3 million more. And so if you want alignment between the leadership team and the investor base, you've got it right here in me. Everybody I know who is accredited, without exception that I can think of, has thrown down in Vireo. So looking to drive maximal shareholder value, that's really a big focus for me, and it's near and dear to me.
So I take it that you're not looking to just get taken out here anytime soon. This is for you. You're an entrepreneur looking to build something here.
My job is to maximize shareholder value, and there's no conversation that we won't entertain. We're very open-minded. I'm excited about how early it is in the process, but look, there are a lot of ways to maximize shareholder value, and that is my job.
Mm-hmm. Bruce Linton, he was involved. He left. Couldn't see eye to eye. Sorry, you couldn't see eye to eye, or is he still involved?
Yeah, no, he transitioned out, and Bruce is one of the greatest of all time as far as just a trailblazer in this space. What he did at Canopy is just remarkable, and think the world of the guy. I have nothing negative to say about Bruce, and look at the explosive success he's having over in the psychedelic space now. No ongoing involvement, but I don't think there's any ill will there at all. Reasonable people can disagree to an approach, and that's fine. But think the world of Bruce.
Yeah, and we follow public markets, so I can fully understand bringing somebody in and not necessarily being the perfect fit. You brought up psychedelics with your background being a physician. Really curious to hear your thoughts on psychedelics.
Psychedelics are fascinating, and I think that conceptually they have the ability to transform psychiatry. There are so many psychiatric illnesses, refractory depression, manic depression. There are things that just, we have treatments for, but boy, it would be interesting to have some additional interventions. And so I think that most kind of psychedelic operators are going to fail because there isn't there. Now, that doesn't mean that this isn't an amazing concept. And I think that sort of, as far as formal FDA paths, the serotonin agonists, the psychedelics such as psilocybin, ayahuasca, et cetera, have a ton of room there to grow. So very exciting, but boy, you have to pick prudently because unlike cannabis, where we have sort of this underlying sales apparatus, Vireo has this amazing IP wing in Resurgent Biosciences, but we have this, amazing MSO with these remarkable markets that are going to produce revenue. They don't have that in the psychedelic space. It's sort of a pure play, pre-revenue biotech play where you're basically betting that they're going to be one of the select few that get through the FDA process with a meaningful end product, but they're not going to have revenue in the interim. So that's the big risk. Most of those I don't think are going to be there. Frankly, a lot that I look at, they're not real. But there's a huge opportunity there for the right folks and the right teams. So it's a little bit different than cannabis. It's much more perilous than cannabis, but there's huge upside there.
What can you tell us about the IP that you guys have or are working on at Vireo?
Yep. So we have an IPCO, an IP company that really focuses on sort of intellectual property development, new products. It's called Resurgent Biosciences. And this is a natural byproduct of our multi-state operator, which of course is our primary focus that buys the bread. So, the two main, there's three main team members there. It's our chief medical officer who does the clinical research, our chief science officer named Eric Greenbaum, who is a pharmacologist and an IP lawyer, which is very helpful. And then our scientific director, who's a PhD in chemistry. They really work on generating IP, but also sort of new product development for the MSO. So this is very synergistic. These two entities really feed off each other. And Resurgent is a very interesting long-term opportunity for us. We spun that off just to give people clarity. We were getting no value assigned to us for our intellectual property, which frankly is generally appropriate in the cannabis space. But we're a different beast there in that we really do have a team member, really science focused. And so I see that as a huge potential set of upside for Vireo down the road. You look at this, like I said, hundreds of billions of dollars of value being created in this space. Size is a big part of that, but there's more to the picture. And intellectual property, particularly that focused on replacing opioids, alcohol, and tobacco, represents very real upside.
I know a few consultants that work in the space, and they say that Vireo is actually very efficient in terms of cultivation. Can you speak to the cultivation of Vireo?
Yeah, I follow the science and the data. We're pretty agnostic to methodology. My preference is natural because that's our consumer's preference. And so we try to do things, as naturally as we can. That ranges from in-ground, outdoor growing in Arizona, all the way to warehouse grows in New York and places in the Northeast. So, people don't, some people really assign a ton of value to yield. And, there's, essentially you can get to darn near infinite yield with infinite cost. And so for us, it really is, what's the end product you're looking for? If you're looking for trim, low-grade flower for extraction, you don't need much in the way of CapEx, infrastructure, or even OpEx for that matter to run that. If you're looking for middle grade flower, high grade flower, that's a different path that costs a little bit more, both operationally and on the infrastructure side. And so we approach it agnostically, but what I can say is that sooner than people think, scale matters. And I'm not talking about hundreds of thousands of square feet, I'm talking about acres. I think that in order to be competitive and in order for a program to be viable, adult use or medical, operators need to be able to grow outdoors, hoop houses, greenhouses, warehouses, the full spectrum. And, we're agnostic. We're going to just do the most affordable path that's passed on to the consumer. Really, I feel that the lowest cost cultivator wins the game. Our intent is to have access to the square footage so that we can be the lowest cost operator on the cultivation side in all of our core markets.
Okay, that's interesting. Jay, do you have a question?
Yeah, so 5 core markets. Of those, which do you feel offers the most opportunity? To me, it's interesting that you've picked 5 rather than there's so many operators out there where they just focus on one core market. So what is it about them that have made you pick them, and which one offers the most opportunity going forward for the company?
Yeah, great question, Jay. So a fundamental difference between us and the other MSOs, especially the second tier MSOs, is that we have such substantial potential regulatory upside in all 5 of our core markets. We have no frothy, what I call terminal adult use revenues. $1 in California on the revenue side is not worth anywhere near $1 in New York or Minnesota. We have so much upside baked in there, no pun intended. The Minnesota and New York, they basically don't even allow flower right now. And so not only are we these restricted medical programs, we have the upside of adding flower in Minnesota and New York, and we have the upside of adult use transitions in all 5 of our core markets. And so we like limited licenses, we like significant regulatory tailwinds, and we like the ability to be competitive for best-in-class retail and have adequate footprint that on the retail side that matches your production capacity to the best you can. Obviously, you bump into license limits in places like New York, but that's kind of the thought process. These were just 5 absolutely amazing markets. And I mean, this is a company that sold Pennsylvania, which is one of the sexiest markets out there. And it does have real upside. But we thought that these 5, relatively speaking, were better opportunities. Short term, the biggest opportunity is Arizona. That's transitioning to adult use in March. Intermediate term, we're very bullish on New Mexico, which is likely to pass adult use transition this spring, and Maryland, which could transition to adult use this year or next. We did just operationalize 120,000 square feet, waiting for regulatory approval on the cultivation side in Maryland. We're opening our first dispensary in Frederick, Maryland, hopefully this month or next. So that's very exciting. And then the big explosive kind of outcomes for us are Minnesota and New York. Minnesota, just the addition of flower would be a very dramatic improvement. That's currently our top revenue generator, as we've publicly disclosed. And New York, the sky's the limit. It has the potential to be the most substantial opportunity, as far as changing laws that has happened yet in the space.
Are you at your capacity in terms of retail outlets then in those states, or is there still more room for you to grow out before things expand further?
We're not at our statutory limit in Arizona or Maryland or New Mexico for that matter. So we have interest in accretive acquisitions in that realm, again, matching production to the retail pipeline to the best of our ability. But we've maximized our dispensaries in Minnesota, where we have 8, and New York, where we have 4. We're always looking to improve. If there's a limited footprint, you want to find that retail dispensary that's going to be meaningful 10 years from now. That's the way to preserve your value. You know, that wasn't possible when we started in Minnesota and New York because there were 5 landlords in the state that were willing to work with you. But now with COVID and sort of the liberalization of things, sequential improvement of our retail footprint is a major focus.
Do you guys have the same brands across all states, or is it kind of different?
Yeah, it's a great question. We're generally we have the brands across all states. We're rolling out Green Goods, which is our retail concept. We still have some dispensaries in the Southwest that haven't been rebranded to that. That's a focus for us. And then, just as far as products go, we do have a full spectrum of various brands. The Vireo brand is very medicalized, but we have some that feel more adult use. Amplify, that's the terpene enhanced brand. We have Light Bud, which is lower THC products, and 1937, which is a social equity, do right the errors of the past type of brand. So there are a lot of brands that feel more adult use, and they're predominantly used right now in these flower dominant medical markets, which are on the cusp of transition to adult use. So it's a major focus to build more brands over time. And the brands are important, but our belief is that even more important is to bring products to the consumer that provide a differentiated experience or outcome, whether that is to be altered, watching TV on the weekend, or to treat your chronic pain. And so that's a big focus for us. If you can build products that are truly different, that brand is a lot more meaningful 5 years from now.
In Minnesota and New York, are you able to sell third-party product, or is it limited to whatever you produce?
In Minnesota, we're vertically integrated, and in New York, you are able to sell third-party products. So there's a wholesale market there that's developing.
And then you also have, I see on your deck, you list hemp licenses in those 2 states as well. What are you doing in regards to that?
Not much. CBD is a tough road to hoe right now. Complete utter commoditization of CBD in the space. Truly remarkable how affordable it is to buy CBD isolate these days. And so it's hard, absent some scale, and absent a $20 or $30 million processing facility at scale. It's just not that interesting of a space because the upside is already gone. It's a commoditized end product. Hemp is very diverse. I've always had interest with the agricultural background and animal bedding and industrial applications, and I'm fundamentally drawn to hemp as a product with a very broad processing facility capability. Is very interesting, but the upside isn't there compared to the THC space. What we're doing in cannabis, so we're turning the page on that part of the CBD focus.
Okay, one last question for you. Here in Canada, and whenever we would hear that, the idea behind all these operators building up all the square footage was, we're going to sell a whole bunch of cannabis into Germany. I think those of us who were kind of following the space kind of cringed. What's the myths that you hear right now going on with the MSO that you kind of cringe when you hear, different companies telling investors? Not sure if you want to go there, maybe talking about your sort of competitors, but is there anything that you think investors should watch out for in terms of that kind of language that's out there?
Yeah, Steve, you don't want to talk funded capacity. You remember those days? Quite comical. Just what was important back in the day. As far as ongoing myths, a lot of them have been dispelled. I think it's important for investors to look at efficient operators. Scale is going to be important, but it's really not the only consideration for long-term outcomes here. I would be very cautious in the realm of IP. Like there's a lot of kind of charlatans in that space, and there's a lot of kind of pseudo IP. I think that a lot of value is being assigned to genetics, and that's tough to protect that because everything is sort of everywhere right now. There are still cultivation myths that are out there, but to be honest, I don't have definitive answers until we see sort of data coming through as far as what makes sense. does it make sense to spend hundreds or thousands of man hours manicuring these plants in a hoop house versus a greenhouse versus a warehouse? These are all interesting questions that we're trying to get to the bottom of, but there's a lot to be learned in this space. I'm so flippin' tired of being humbled by this space. I hope that I know something eventually, frankly. It just seems like it's been a nonstop learning process, and I still feel like my leadership team and I are 5% of the way there. So there's still mythology out there, but we're ourselves trying to learn what that is.
Yeah, I'm a believer that as the regulatory environment opens up, you've got a lot of these NYSE, NASDAQ listed companies that are going to be looking to do some serious M&A, and the smaller operators like, say, a Vireo or some of the other ones I won't mention are going to become really attractive targets. So I got a feeling that I don't know if it's going to be this year or next, but there's going to come a point where that meeting you had with all those local folks down in Minnesota that wrote those checks for you, they're going to have a pretty happy time coming up at some point in the near future. But Kyle, we really appreciate you taking the time to come on and sort of chat with us about the space. We love hearing about it. And this is a name I've always wanted to know more about. So now I've kind of got the insights that I need to continue to sort of understand it as I follow the news flow. And Jay and I kind of comb through the CDR filings, and we're looking at the financial statements. We've got a better picture of what's going on. So thank you very much for joining us.
Steve and Jay, thank you. Really appreciate your time.
Okay. Well, Jay, what's going on today at the dive?
Today at the dive, this afternoon, we will see Freeport Resources on the daily dive. CEO Gord Friesen, I think it's Friesen, joins our host Cassandra. Just before we went live, we had a research report come out by young Justin on Jushi. Sorry, I'm drawing blank.
And Siggy put out a short report over at Grizzly Research.
Grizzly Research put out a short report on, I think it's DOYU, a China operator. I obviously haven't had time to go through it or see what the genesis of it is. This afternoon, we've got more macro. I think I'm going to publish some stuff from Braden as well as Jim McFadden. So it could be a very busy afternoon for me yet.
And if you want to give our audience a very quick disclaimer.
Quick disclaimer. We are here for entertainment purposes only. Neither Steve nor myself contain or hold any financial licenses, designations, or otherwise. Speaking strictly on opinion and opinion only. And whether or not you agree with it is up to you.
It's totally non-qualified. If you ask my wife, my opinion means nothing. But guys, I appreciate everybody taking the time to join us today. It's really fun to get to hang out, and I pretty much spend most of my day, and so does Jay, on these calls where we're just talking with companies, and especially junior companies. And what we're hoping to do more of is just sort of do those calls kind of live on the air. It gives our audience a glimpse into sort of watching these interviews if they're interested in these stories. I don't know what kind of an audience there ultimately is for this, but there's going to be a few of us kindred spirits out there that love hearing about these names. And heck, even a Vireo, like I don't know what kind of valuation they're trading at today, but could it one day be $1 billion takeout? I don't see why not. We're going to see a lot of traction in the space. It's not a name that a lot of people talk about. They own some pretty valuable licenses, and I think that it's certainly a name worth keeping an eye on. And I really appreciate that Kyle took the time to join us today. So tune in tomorrow. We're going to have Jim McFadden on, our resident CFA, who's been pretty much crushing it with picks. And Jay, before we forget, Brady Cobb, I was good. Congratulations to Brady. How did we miss this news?
We just didn't get to it this morning with the technical issues.
We were fighting with our technical issues today. Very, very quickly, what's the good news for Mr. Cobb?
So Brady Cobb and his Bluma Wellness, Be Well on the CSE. Brady's been a supporter of us. He's a great guy to talk to. He's been on the daily dive. previously. Managed to get a great return for investors. US $1.12 per share, selling Bluma to Cresco Labs. I mean, we all knew it was going to happen. It was just a matter of time, right? I mean, the Florida market is hot. Everyone wants to be there. TrueLeaf may be dominating in terms of market share, but that doesn't mean great operators like Bluma don't exist. I mean, Bluma is well known for the quality of their flower. I think they have the second highest flower sales in the state. Brady did a great job on this, and hats off to him.
Yeah, he created real shareholder value, and started out. I know it's been a struggle for a lot of these guys. Like just talking to Kyle and some of the other people in the space, just raising money has just been so tremendously challenging for anybody who's had a deal trying to get investors to bite. We all knew that there would come a time where investor appetite was going to come back in, and once that regulatory hurdle starts to kick in, you're going to see retail investors in the U.S. go nuts. And this environment, we're going to look back at these days and go, remember when you could buy, TrueLeaf for $10, $20,
and we thought it was expensive.
Yeah, like that day's going to come, and I think that day is going to come probably within the next 12 months. So, so everybody, thank you so much for joining us today. We really appreciate it, and we will be back on tomorrow with the great Jim McFadden talking small caps. All right, thanks.